Hey, what's up, stock compounders? Brad here. So last week on Wednesday, Mohnish Pabrai interviewed SumZero CEO Divya Narendra about the future of Facebook. Okay, this was a live Zoom call that happened 9 in the morning last Wednesday, February 16th, an hour before Charlie Munger's Daily Journal annual meeting. Um, it was also broadcast on Twitter Spaces, okay, because I guess this Zoom call filled up and they had to put the overflow into Twitter Spaces. So I attended live. I listened live. I was dropping my son off at preschool, so I caught part of it in the car and part of it when I got home. But it was a really interesting, kind of wide ranging conversation about the future of Facebook, the future of meta platforms, and quite timely as well, as the price of Facebook has just gotten beat up recently, where the acquirer's multiple right now on Facebook is like 11 times. Okay, that's enterprise value to earnings before interest and taxes, 11 times on a tech company like Facebook. It's pretty unheard of. So, anyway, I want to dive into the conversation that these two had and kind of share my highlights. This isn't public yet on YouTube. I think it was just made available to the SumZero community. You can see down here it's unlisted, so you won't be able to find it if you search for it. But hopefully it'll come out publicly soon. So let's dig in here. So Divya was actually involved with Facebook way back when, okay, before it IPO'd. So he's been with the company really since the Winklevoss twins, okay, were involved with Facebook. And he was in the movie, The Social Network. Oddly enough, his character, the actor that portrayed him is Chinese American. So I guess they couldn't find an Indian guy to play Divya in The Social Network, but what can you do? Pabrai points out the enterprise value of Facebook, at least when this was recorded 6 days ago, was 536 billion. Okay, so right now it's 516. So it's come down 20 billion in less than a week. And he pointed that out because net income is kind of 40 to 45 billion. All right. And comparing net income to the enterprise value, it's an incredible multiple what Facebook is trading at right now. That's really what Pabrai was pointing out here. And he also points out there's no other large tech company with 3.6 billion users. Okay, there's 4 billion people that use the internet in the world. Okay, one of the questions I had is how many of these 3.6 billion people, are unique individuals? They're not bots. How many people have multiple accounts? Are they counting those multiple accounts as multiple users? So that's one question I had. It can't be that there's 4 billion internet users and 3.6 billion of them are on Facebook or Instagram or WhatsApp. That just doesn't quite compute. So I got curious about that. And Divya, he pointed out, yeah, there's 3.6 billion users, but the engagement here is much more important than the number of users and how those grow over time. Okay, it's pretty hard to grow from a 3.6 billion user base, at least faster than population growth. But the engagement is really what Facebook is focused on, kind of getting more and more engagement from that same user base. Let's see. Pabrai said he's never owned Facebook. Okay. I found out just recently that Pabrai owned Amazon. I think it was in like 2003 or 2004, which that was the first news I had heard of that. So I wasn't sure if he had owned Facebook, but he came out and said he's never owned it. Divya has owned it for more than a decade. Okay. So it's always interesting to watch a conversation between two people about a stock who are in those very different kinds of positions where, Divya has been following it closely for more than a decade. So you've got all of the biases, right, associated with that. And Pabrai is kind of looking on as a sort of an uninterested bystander. I mean, interested because there's a lot to learn from Facebook in terms of what makes a business great, right? It's a fascinating case study. Um, but he doesn't have any skin in the game in terms of uh, stock ownership. So um, let's see. So here's what Pabrai says. I think Facebook's ad platform is incredibly good at targeting. Okay, he pointed out the shirt he was wearing, right? If we go forward a little bit, the shirt that Pabrai is wearing. Well, let's see if we can find a spot where Pabrai shows up. A lot of Divya here in the early parts. Oh, I've got an ad. Okay, we're not going to get the Pabrai shirt, but you guys have seen it before if you've watched Pabrai's previous videos. Pabrai actually saw that shirt in an ad on Facebook, and that's why he bought it. And he has like 20 of those shirts. Same with the shorts he's wearing. So he's very impressed at the ad targeting from Facebook. He thinks with Reels, Facebook doesn't quite have it figured out yet. The ads with the Facebook Reels don't speak to Pabrai. He thinks this is irrelevant to me most of the time. But when he looks at TikTok, the ads there are spot on. I don't think Pabrai uses TikTok, but I think people he's talked to about TikTok and how targeted their ads are, they've got it dialed in. So he pointed out that difference between Facebook Reels or Instagram Reels and the TikTok ads. But he also mentions revenues aren't going anywhere, right? Cash flow isn't going anywhere. The core business of Facebook, which is the Facebook ad platform, is very strong, very entrenched. And, he says even with 5 to 10% annual growth, which doesn't seem like a big leap, the stock ought to be a double at current interest rates. Okay. And this is, this made headlines in a lot of different sort of media outlets that I follow. Pabrai thinks Facebook is a double with low risk, right? And that's very important. You can have something that's you think might double, but on the flip side, you might lose all your money, right? Pabrai thinks this is a heads I win, heads I get a double, tails, I'm probably not going to lose. So at current interest rates is a really important point there. If the Fed raises rates, which who knows what's going to happen, as rates rise, that puts a lot of valuation pressure on particularly growth companies, tech companies like Facebook. Certainly, it'll put a lot more pressure on companies that don't have the earnings that Facebook has, that doesn't have the valuation multiple that Facebook has right now. But still, if the Fed raises rates, I mean, that's like gravity for valuations in the stock market. And that could certainly get in the way of Facebook doubling in the next 2 or 3 years. But given the same interest rates 2 or 3 years from now, Pabrai thinks, hey, it's probably an easy double. Okay, it's a pretty low risk bet in that sense. And of course, a double in 2 to 3 years. In 2 years, you got 26%. No, sorry, 35% compounded growth rate per year over 2 years. And 3 years would be 26% compounding. So those are very compelling numbers in terms of returns with a double in 2 to 3 years. But he points out when I try to look beyond the double, right, beyond the 2 to 3 years from now, everything related to Meta is an option I'm not willing to pay for. Okay. So Pabrai isn't looking for doubles. Okay. He's mentioned this after drinking the Nick Sleep Kool-Aid, right? The letters from Nick Sleep about finding these long-term compounders and doing nothing, right? Watching paint dry, going to sleep for a decade. This doesn't fit into that basket for Pabrai. You know, if Pabrai had seen this 2 or 3 years ago, before he had this framework of long-term compounders, it would probably be an easy bet for him. I have to assume that he would have bought in if we were a few years back. Whatever they're spending on Meta and whatever they're claiming, in my opinion, I don't think Facebook understands what Meta is. Okay, so that's a pretty strong statement from Pabrai. You've got this company in Facebook that has rebranded to Meta Platforms, right? October of last year. Total rebrand. Pabrai doesn't really think they understand the metaverse, okay, and what it is. Meta is a very big technology leap from where Facebook is today. So Pabrai thinks it's pretty unlikely that Facebook Meta is going to be able to dominate this space. He just doesn't see a lot of parallels between kind of their current technology, right? What they're really good at today and what it's going to take to kind of dominate this this emerging space in the metaverse. I believe the revolution is going to come from some guys in a garage, okay, not from behemoth corporate Facebook. Meta is really good at acquisitions, okay? Instagram, WhatsApp. Pabrai pointed out in this talk, he thinks Instagram may be the greatest acquisition of all time, okay? Even above YouTube with Google. Execution on Facebook is fantastic, right? Their core business, the ad platform, the Facebook platform has been fantastic. That's their bread and butter. They're very good at that. But when they try to go outside that in terms of developing, new lines of business that's outside that bread and butter, that's just not in their DNA, okay? They have been very good at acquiring kind of early stage companies. But he thinks that this whole idea of developing this technology platform, this metaverse internally, just doesn't quite seem to fit Facebook's DNA. So he thinks Meta is a call option that should come for free. That's how much likelihood Pabrai is ascribing to this outcome actually materializing. If you're an investor looking for a double in 2 to 3 years, I think this is a decent bet with relatively low downside. But if you're looking for this to be a 10-bagger or even a 5-bagger, then you're getting into speculative land. Okay, you're kind of in speculation territory. One approach an investor could take is buy the stock, hold it for 2 to 3 years, right? Get your double, and then evaluate the execution on Reality Labs, on the metaverse. If Facebook has sold 10 million Quest 2s, right, as Divya mentions in this talk, where are they in 2 to 3 years, right? Have they made meaningful progress in terms of getting mainstream adoption with that technology? So a lot easier to evaluate where they're at 2 or 3 years from now than it is today, just 4 months after this rebrand to Meta. And then you just look over the last 3 years, right? Say we're in 2025, okay? Facebook has doubled. Instead of 200, it's $400 a share. I can look back over the last 3 years. Has Meta, are they making any traction? Are they making progress? What did that 30 billion in spending on Reality Labs actually get them? Right? If they're spending 10 billion this year and then 10 billion each year for the next 3 years, what's the outcome of that? Do they have anything to show for that? Let's see. So Pabrai talks here about some of the large tech companies and how he sees the skill in capital allocation amongst the big tech companies. He's talked about this before. In a business school, he did around, Amazon versus Tencent versus kind of Alibaba and Google and Microsoft. So he's singled out a few here. Amazon and Tencent are the only two large tech companies that are off the charts on capital allocation. Okay. Amazon has no cash on the balance sheet. They don't make one large bet. And the cash comment is really around when Amazon comes into cash, right? They have cash. They know exactly where they want to put that cash. Okay? They have opportunities to invest that cash internally that generate very attractive rates of return. Okay, and that's not a situation that Facebook finds itself in, or Microsoft, or Apple, or Alibaba. Right? They have those companies have a significant amount of cash on the balance sheet. Just because they can't reinvest it at very attractive rates. So Amazon can. They have no cash on the balance sheet, but they don't make one large bet. Okay? That's really what Pabrai sees Facebook doing here. Okay? They're all in on the metaverse. Amazon makes many bets, many small bets, and then they devote more resources to the bets that gain traction, right? The bets that seem like there's potential from those initial small tests. And then, of course, Amazon, they have many failures, okay? But the failures, they're like these little paper cuts that don't really impact the bottom line of Amazon. And they kill those failures very quickly, right? Tencent knows they have limited competencies internally, but their venture and investing arm is off the charts at the level of Sequoia or Andreessen Horowitz. The long-term returns on their outside investments have been 36% annual compounded. Okay, and they've done it globally, and they've done it at scale. So, Tencent, right? Obviously, they've got very profitable projects internally, but they also have this VC-like arm where any excess earnings that they can't pump back into their kind of core team at Tencent, they can invest in other businesses and do very well. And with Tencent internally, they aren't willing to make $10 billion bets like what Facebook is doing. They built WeChat with a 20-person team on the side. Okay, so it was this little side project that just grew into this behemoth. Meta, on the other hand, is going all in on one bet, which is the exact opposite of what Amazon does. I cannot give credit to Meta to take VR mainstream. Okay, the gamers will go for it, right? The early adopters will go for it. So, okay, you sell 10 million of these Quest 2 headsets, but to go from 10 million to 1 billion devices, that is a massive leap. So, that's really Pabrai's perspective on this. Uh, Divya points out everything Facebook is doing with Reality Labs is a direct alternative to smartphones. Okay, and that kind of caught my attention, right? You've got these smartphones here that they're kind of clunky, right? But Brian mentioned, if you're navigating maps, it's cumbersome, right? It's not a seamless user experience to be driving and have to look at your phone, right, to kind of navigate you. There are much better solutions that will probably be coming very soon. Um, so what Divya was pointing out here, all these different devices that I guess multiple devices that Meta is working on, um, are really going to more seamlessly integrate with our experience of the world, right? You've got people driving. I see it all the time. People driving and texting, typing on their phone. That is terrible. Like, that technology needs to change. It's dangerous. In fact, I mean, you could argue the people using it are the ones that are dangerous, but you know, technology has a long way to go, right? The smartphones are incredible, right? The iPhone is incredible, but I mean, the things that Facebook is working on in terms of augmented reality and virtual reality, in multiple different formats, right? Watches, glasses. It's just interesting to think it could totally disrupt, right, the smartphone players. Let's see. Pabrai mentioned Jassy. Jassy is the CEO of Amazon after Bezos stepped down. Jassy is mini me, a Bezos clone. Might even be better than Bezos. Okay. Facebook doesn't have the DNA of an Amazon where they can throw 50 things against the wall and then pick the 6 that scale. Okay, Zuck's DNA is more about the one big thing, right? Focus on the one big thing. And that's something we've talked about enough in this review here. Soundbite. This quote is incredible. I love this. Elon is closer to Mars than Zuckerberg is close to Meta going mainstream. Now that is a powerful statement. I don't know that I agree with Pabrai on that one, but honestly, I haven't followed SpaceX very closely. I don't know how close we are to putting people on Mars. Okay, I have no idea. But that caught my attention. Elon getting humans to Mars is a higher probability than Meta having 2 billion users and blowing out the iPhone. Okay, so Pabrai was responding to what Divya is talking about here in terms of, Meta kind of making the iPhone obsolete by just developing better technology. Pabrai doesn't buy it. We should have this conversation again 2 or 3 years from now, right? So perhaps, buy in today when Facebook is basically trading like a value stock, right? 11 on an acquirer's multiple basis. It'd be hard to argue that that's not a value stock. So perhaps buy some today, not investment advice. And then 2 or 3 years from now, have we doubled with Facebook? Are we at 400, buying in at 200 now? And then what have we got? What kind of traction? Where have we come in terms of building the metaverse, within Facebook? And the final point from Divya, he mentions, and Pabrai agreed with this, metaverse aside, there is plenty of room for growth in the core business of Facebook. Okay. So, I think that's a very important point. It's easy to look at the 10 billion being spent on Reality Labs and think, man, they are going all in on one bet to the point where they're cannibalizing their existing business. But that's not necessarily true. They could probably spend 10 billion a year for a while before they realize, meta isn't going to work as a concept, and they could still, right the ship, I think. So it is a big bet on one bet, but I don't necessarily think if it crashes and burns, that it's going to kill Facebook, the company. So that's there you go. Some highlights from this awesome conversation between Divya Narendra and Mohnish Pabrai. So I hope you enjoyed this, guys. Let me know in the comments what really jumped out to you about this conversation. If you bought Facebook recently on the dip, and if you plan to continue buying if the price continues to fall. Always enjoy hearing from you guys. So let me know your take on all this. All right, guys. Thanks for watching, and I will see you in the next one. Take care.